Hey everyone, Charlie here. We're running a quick survey. We want to better understand who our listeners are. Do me a huge favor and fill out that survey. It takes under a minute, and the link is in the show description. This helps us make better content for you. Thanks a ton for listening. Link in the show notes.
What's going on, y'all? Welcome back to the Mining Pod. For today's show, VanEck's head of digital assets research, Matthew Sigel, joins us to talk about all things Bitcoin and crypto equities. We open the show talking about the biggest headline of the last few weeks, the Core Scientific and Coreweave acquisition deal that is undergoing and might finalize in Q4 of this year. We also touch on Bitcoin treasury plays and whether or not the market is too crowded and where the opportunities for this playbook still rest. We even touch on ETH treasury companies and whether or not institutional investors have appetite for that. And Matthew also gives us his take on whether or not the crypto equity play that has been so predominant this cycle will persist into the future over the next few years. This is not an episode that you want to miss. Matthew comes packed with insights, so I hope you all enjoy. Today's show is brought to you by Fractal Bitcoin, but we'll learn more about them later in the show. For now, let's get right into it.
I want to take a second and talk about Colorado Air Filter, a new sponsor for the Mining Pod and a major supplier of air filtration systems for Bitcoin mining sites. Colorado Air Filter is currently running a summer sale on their inventory. From Mervate pleats to HEPA filters, shipments to installations, containers to retrofitted buildings, Colorado Air Filter has it all. Here's what one recent major miner had to say about working with Colorado Air Filter. Working with Keith and Colorado Air Filter has been a seamless experience from day one. Their filter media consistently meets the demands of our Bitcoin mining facilities, ensuring reliable airflow and equipment protection. Keith is responsive, knowledgeable, and understands the unique operational pressures in our industry. We value both the quality of the product and the outstanding service they provide. Units are ready to sell. Contact sales at coloradoairfilter.com using code MININGPOD to claim 15% off today. Again, that's sales at coloradoairfilter.com with code MININGPOD.
Alrighty, Matthew Sigel, welcome to the Mining Pod. How you doing, man?
Good to be here.
Yeah, thank you so much for joining. We've been wanting to get you on for a while. We're big fans of the work that you do at VanEck and some of the research you put out. I always like the little peepholes you give us into the Bloomberg terminal. It's always nice to see stuff from that side of the online world. So for today, I would think we should touch on just some of the more important trends that we're seeing in crypto and Bitcoin equities in general. We'll maybe get to some on-chain stuff, but I think really for this conversation, I want to kind of keep it with one of the hottest trends that we've seen since the ETFs came out. And this is the kind of equitization and financialization of a lot of these Bitcoin and cryptocurrency ecosystems and the companies involved with them. So to start, I think we need to go with probably the biggest news, at least from our side of the world on the Bitcoin mining side this year, which is Core Scientific and Coreweave's proposed acquisition. So Coreweave came out recently saying that it is offering to purchase Core Scientific in an all-stock deal valued at around $9 billion. Now that goal post will shift. Core Scientific took a big hit after the announcement, and it looked like at the time it was about $20.40 per share, but we don't know where the dust will settle until the acquisition is actually finalized. Just to start off, what are your thoughts on that news? And another way to frame it, potentially, who do you think is getting the better end of the deal here?
I think big picture, it is a great validation of the AI pivots that a number of these miners have made. So we wrote a piece more than a year ago trying to put some numbers around what these AI pivots could be worth. And what we concluded was that for most of the miners, pivoting is very material to their long-term value creation, and the market liked the pivots. The companies that were early and aggressive were outperforming. I think Coors was the earliest and the most aggressive, and they, have been rewarded with outperformance and now a takeout. And what we've seen in the price action of, Cypher and Iron post that deal, those guys outperforming. So, the market likes it, but the way that deal was structured, is a bit unfortunate if you're kind of pure play cores investor, because now you end up, very levered to CoreWeave stock. And CoreWeave has been post IPO, I'd say more of a retail stock than an institutional name. There's a lot of shares, like 80% plus of the shares that'll be unlocked for sale in August and September. So pretty decent overhang of CoreWeave shares. And because of the volatility, the unlock, and the retail participation, the usual convertible arbitrage, the merger arbitrage community that would kind of play both sides of this deal is not around, and so that's why I think Cores is selling off. So I think it's too early to say who got the best of the deal, but the early indication is that it's CoreWeave, right? Because there's no cash element to this deal, and there's no floor to the valuation. If CoreWeave goes down 50%, the value of the deal goes down 50%. Now that could prompt shareholders to vote against this deal, and maybe there's another bidder that would come. But then I go back to the observation that CoreWeave is more of a retail stock at the moment. Like, hyperscalers don't want to own the energy directly, because they want the cover of buying green energy and not having emissions and not being responsible for some of the kind of dirty side effects of creating all that electricity. They like the intermediation that the utilities bring or that CoreWeave brings. So, for those who are hoping that like a big tech company is going to emerge as a second buyer or a second bidder for Core Scientific, I don't think that's very likely, and that's what the stock's telling us over the last couple of days as well.
So, not very likely in the sense that you think this is Core Scientific's best shot currently of getting acquired. Like, if it's basically CoreWeave or nothing, and it seems that way, but given the fact that this was an all stock deal.
Yeah, I mean, that's my guess, right? It could change, but I don't think that a hyperscaler is interested in this asset. And Meta made a deal today. They bought an eyeglasses maker, right? I mean, it's a minority stake in it, but like, they're getting into wearables. They don't want to buy the megawatts. It seems to me, right? Maybe that'll change.
So, what do you think this means for all of Core Scientific's Bitcoin mining operations, right? So the deal, as I understand it, it's roughly 850 megawatts of HPC and AI infrastructure, and that's potential. That's not all built out. I think the original CoreWeave deal was about 590 megawatts, and then Core Scientific has more facilities that they can retrofit on top of that. But that also leaves about 500 megawatts of Bitcoin mining operations that presumably CoreWeave wants nothing to do with, right? What do you think is the best use of those assets? They just sell them off to another Bitcoin miner? Do you think there is a world in which Core Scientific actually peels those off? There's probably no chance of that happening, but what do you think happens with those sites?
Yeah, I think they'd get sold to another probably listed player, is most likely. Core Scientific said, or CoreWeave said on the call, that they would look to divest these assets, or repurpose them. So I think CoreWeave will be out of the business of Bitcoin mining, and the ASICs will end up in someone else's hands.
I want to go back to this arbitrage comment that you made, and I want to get a tweet up from your Twitter account. I believe this is the right one. Yes, and this is a quote from Jeffries. Given the cost to short volatile stocks like CoreWeave, the typical merger arbitrage investor who would employ long short strategies are unable to do so. You kind of touched on this, but can you expand on this a little bit more? And you're saying it's particularly to do with, per this tweet, the volatility, also the fact that CoreWeave is still more of a retail play, and so we don't have institutions involved smoothing out that volatility. Or I think you said that for Core Scientific. But what is the lack of arbitrage, or maybe the diminished arbitrage in this trade? What is that going to do for price discovery? What are the ramifications for getting this deal finalized in terms of where the stock will end up, since it's an all stock deal?
Yeah, normally in a deal like this, where the purchase price as announced implied, as you said, like that $20 odd price target for Core Scientific. So normally investors might buy shares of the acquired company, Core Scientific, and try to bid it up, close to that $20 range, short shares of Coreweave, and kind of have the value normalize. Because Coreweave shares are extremely expensive to borrow, given the low float and the high retail ownership, I've seen numbers that it costs 100% of a year to short Coreweave stock. So that type of merger arb of going long Core Scientific, short Coreweave doesn't really work because it's too expensive to borrow the Coreweave shares, and they are too volatile to make a predictable profit. So I think that those folks are just absent from this deal. They're not really playing in it. Now, if we saw the implied Core's discount reach almost 30% on Monday, and it seemed to find a floor around there. Just checking where it is at the moment. Like there was some interest. When you get to the extreme levels, you will see some interest. But it looks like that extreme level is like 30%, whereas in a normal deal, it might be, it's at 27.5% now, is the implied discount to the Core's shares. I would think, given that this deal's expected to close in Q4, it's not that far away. 30% seems really steep, even 20%, but you can't make those profits without taking on a lot of risk in Coreweave unless you can short Coreweave on the other side, and those shares are just not available. So it's a bit unfortunate for the Core's holders here.
Yeah, it seems, when you were looking at the stock prices on the announcement, it was just very clear early on who was getting the better end of the deal here, or, which investor base was happiest. Core's sold off quite a bit. I believe it was in the ballpark of 15 to 20%. And Coreweave was more or less unchanged. It was down a few percentage points. Is Bitcoin's most active scaling solution already here? Fractal Bitcoin's rapid hash rate growth and transaction volume suggests it might be. Today, close to 80% of Bitcoin's hash rate is merge mined and securing Fractal Bitcoin. What's more, Fractal processes over 11 million transactions daily, which is on par with the most active chains in the crypto space. Get the full scoop in our new report on Fractal Bitcoin. Explore its innovative cadence mining mechanism, emerging ecosystem of applications, and why Fractal Bitcoin is becoming Bitcoin's go-to innovation layer. Download the full report by accessing the link in the description below. Going back to one of your original points that this is kind of a pivotal, or we might even say, a seminal acquisition in the Bitcoin miner hybrid AI infrastructure player sector. What do you think this presages for the future of just pure play Bitcoin mining equities? We wrote a piece for the newsletter a while back where we basically said, piggybacking off of JP Morgan's research, that we think we've probably seen the top of US hash rate dominance, at least from the public mining sector. JP Morgan estimates that in June, it peaked at about 31% of total global hash rate came from US listed miners. So not all of those miners have operations in the US, obviously. Like some of those miners are Bittier, who have operations in Bhutan and Norway. Some of them are Hive, they have them in Paraguay and things like that. But it's hard for me to see a future in which the public mining sector has the same kind of go-go days that we saw last cycle, when there really were no other vehicles for Bitcoin exposure on some of these markets. And if we look at the AI race and the energy bottleneck, it's hard for me to not see the juicy opportunities for maybe a Riot, right, who's actively looking at retrofitting all of Corsicana. Bitfarms is looking at Panther Creek and its Pennsylvania sites and saying these are going to be HVC and AI. Iron is no longer buying rigs, at least for the foreseeable future, as they try to figure out what they're going to do with Sweetwater and if they can find a tenant for that gigawatt plus facility. So kind of a meandering way and long-winded way of asking the question, what do you see as the future for these pure play Bitcoin miners?
Well, if anything is consistent among Bitcoin miners, it is change. So these companies are, highly reactive to market conditions. And if you look at like what Hut 8 is doing with American Bitcoin, basically spinning out the miners into another company, which they, for now, own a majority stake in. But as you see the capital markets open up, ABTC, well, it kind of already is its own entity via Griffin. And I think that's what we'll see, is basically like new business formation from folks who are new to the space and are willing to start with a mining operation. So I don't think it's the end. I think we're going to go higher than that. I think we'll hit 35% on the US listed miners, because the capital formation comes from U.S. markets. Like ABTC is going to list on the NASDAQ. Phoenix wants to list their mining assets on the NASDAQ. Like everyone wants to come here and list, because this is where capital is available. There's going to, I'm guessing, there's going to be this 2 or 3 year period of time that started last year where you have the hybrid miners who are scaling their AI businesses while holding on to their kind of cash cow Bitcoin mining. And then the capital markets will determine whether the multiple will be higher on separating the companies or leaving them together. And each company is going to make that decision. And we'll just see this continual like breakups and reformation, different ownership. But I don't think it's the end of the pure play Bitcoin mining at all. And we'll probably get into this, but some of the treasury companies are making pure play miners look really, really cheap. So everyone is so bearish on the core business of Bitcoin mining that it be interesting to see what Marathon does. Like, they could theoretically spin their Bitcoin off into a treasury company, but that might only be palatable to the market when Bitcoin's at 150 and when all the miners like look cheap on earnings. So that could still be ahead of us, right? Like if Bitcoin has another big move, then these miners are going to look so cheap. The payback on rigs is going to be like less than a year, and people are going to get excited about that business model again. I don't think we're done with that pure play model at all.
So I want to put a pin in that, because that's a really good way to bridge part 1 and part 2 of this conversation. But before we do, I want to zoom in on American Bitcoin for a second and want to get your thoughts on where they are now versus during the announcement. Because if I recall correctly from some of your tweets, and I was scratching my head about this too, and if I'm mischaracterizing you, please correct me, but it's basically this criticism that, okay, Hut 8 is trading what it used to own 100% of for an 80% stake in a new company. And at first, people were wondering, what's the point of this? Became clear as they said they wanted American Bitcoin to go public as a separate entity. Do you like this strategy? Do you think this is paying off for them? And as a part 2, is part of the magic there the fact that they attach themselves to one of the most notable names, right, in terms of the Trump family? They're not directly partnered with Donald Trump, but with his 2 sons, Donald Jr. and Eric Jr., or Eric Trump. That has to bring some appeal. So those 2 questions, is this a good strategy so far? And do you think it would pay off if they didn't actually have that brand recognition?
I think that what it highlights is how capital intensive these businesses are, both sides of them, right? In the mining business, you need to constantly refresh your rigs, and because of the depreciation, like the maintenance capex is material. All the Bitcoin miners raise capital, dilute. That's, it seems to me, part of the business model. And then on the AI side, they've got these new capex requirements to retrofit these facilities, and it can cost $10 million a megawatt to do so. So I'm not dissing on Hut 8 at all. Like it's a very capital intensive business. They have 2 legs that both need capital. And as a minority shareholder, do you want them to fund that like in one shot, or to split it up and kind of let the market assign a multiple to both businesses separately. Theoretically, that latter approach would, maybe unlock more value, especially because the AI theme is so hot and some of the valuation of the AI pure plays are so high. Makes sense. And yet for the Bitcoin mining side, you need a front man who can raise that capital for the Bitcoin mining side. And then because of the taxes, HUT can't just spin it off completely in one shot without that being, I think, pretty unpalatable from a tax perspective. So they end up in this middle ground where it's a consolidated entity for some period of time. That's not maybe like the cleanest and fastest way to do it, but given the realities of the market and the fact that both sides of the business see capital, it's a reasonable way to do it. And I think they're aiming for that pure play AI multiple out of the non-mining part of the business.
Got it. So going to the comment you just made about maybe the market needs to, or rather, Bitcoin miners have a way to catch up to some of the other Bitcoin treasury companies. I mean, Bitcoin miners, as most of our listeners know, were like the OG treasury companies, and the multiples that they would trade on in the past have historically been much larger. At least I can remember the last cycle, the kind of beta that you would get from some of these miners when Bitcoin would move would be crazy. So what do you think it would take for them to catch up? Is it just a matter, like you said, Bitcoin's price going higher? I mean, are investors at this point too sophisticated within the Bitcoin and cryptocurrency equities play that they're looking at Bitcoin miners and saying, we don't want all of the risk associated with the Bitcoin mining business. We just want pure play Bitcoin exposure. Is that why they haven't caught up, or are there other things keeping them back?
I mean, I don't think institutions love the business model where your revenues fall by 50% every 4 years and you're constantly diluting minority shareholders in order to pay for that degradation and the machine upgrades. On top of that, and we're about to have some new research out on this, the miners have not distinguished themselves with other aspects of their corporate governance as well. We still observe executive compensation, which is too high, out of line with the rest of the market. And if you look at the latest proxy season, investors are starting to vote against these. It's called a say on pay, where you give the shareholders some input into the executive comp. So there's a whole number of reasons why institutions kind of aren't in these stocks. And then for retail, as you noted, last cycle, it was the only way to get Bitcoin beta. Now we've got MicroStrategy and 100 other MicroStrategy copycats who are all basically levered and can give maybe some pure levered exposure to just the coins themselves. So I think a higher Bitcoin price would absolutely help. So like at 150, everyone is printing money and these stocks do very, very well. But in a trading range, they need to prove it with execution, I think, in order to get kind of more enthusiasm around these stocks.
So for the treasury play in general, I want to get a tweet up from David Bailey, whose company BTC Inc. has been very instrumental in architecting many of these in the international realm. He says here, we funded 15 public treasury companies in 11 unique capital markets. To date, they've bought or are buying 30,000 plus Bitcoin in aggregate. We have 30 deals in the pipeline right now. David is never one to shy away from tooting the trumpet. But two-part question here, and we'll start with the first part. Is this getting too crowded at this point? I mean, how many of these Bitcoin treasury companies do we really need in the market to offer investors this kind of exposure?
I think it's pretty crowded. And so full disclosure is that VanEck participated in the Nakamoto private placement in our digital assets alpha hedge fund. So we do have exposure to that one. And we own a number of others as well, although relative to like a pure play index of crypto equities, we're probably underweight this sector because I've just learned over the years that leverage and Bitcoin don't go together too well. And if you want to kind of stick around for the whole cycle, you want to be very, very careful with how you deploy leverage. There's a lot of stock that is going to come to the market over the next 1 to 2 quarters as some of these lockups expire on the Bitcoin treasury companies. And my guess is that if Bitcoin stays flat, the majority of these will be down materially over the next 1 to 2 quarters. But I think there's room for 5 to 10 very large companies, and the key is to find a way to acquire your Bitcoin at a good price, or to sell it at a high price. So here's where I'll kind of break down like 2 models that I think may work, in addition to Semler, who's got his kind of main line into the convertible arbitrage community, direct relationships with the largest hedge funds in the world who have trading desks to trade the MicroStrategy capital stack. And there, I think the flywheel is well established. The reason why I think it'll work for Nakamoto is because of the distribution that David has through Bitcoin Magazine. I come from the media business, so I really can appreciate how powerful that can be to get eyeballs on your ticker by owning a publication. And something has to fill media space. So if it's not your ticker, it's going to be someone else's. And that's where I think that Bitcoin Magazine, UTXO, David Bailey, will succeed. And that would be because I think that they'll be able to get a better premium to MNAV on their companies because of the eyeballs that they can drive. Then there's, how do you acquire Bitcoin cheaply? So, an entity like Vivek Ramaswamy's Strive, tickers ASST, they have, I think, a pretty innovative idea for how to acquire Bitcoin cheaply. And that is by taking over overcapitalized biotech companies that are trading below the cash on their balance sheet and then putting that cash into Bitcoin. And because Vivek founded a biotech company, Roivant, and he knows a lot of the investors in the space where, a lot of these companies raised too much capital in the 2021 bull market, and their stocks have done nothing. A lot of investors are underwater. They might be happy to sell the equity for essentially the cash on the balance sheet, and then that cash is deployed into Bitcoin. And really, the companies for whom a Bitcoin strategy makes the most sense are cash-rich, low-growth companies where the market's not giving them any multiple. And so you might as well put your balance sheet into Bitcoin as it becomes the hurdle rate for new innovation. So Strive could end up as a consolidator in the space, firstly by acquiring these kind of overcapitalized biotech companies and pivoting them, but also if a name like Semler, right, which is the lowest priced Bitcoin treasury company based on MNAV, if that were to go below 1x and stay there over a long period of time, they would have some tough decisions on whether to sell their Bitcoin and buy back stock, or maybe they could sell out to someone with better distribution, or with a model like Vivek's model. So, I think there's oversupply. If Bitcoin hits, what we think it could hit this year, it might not matter. They all might work for the meantime. But otherwise, we're being quite selective and trying to buy the ones that either have a differentiator or are uniquely cheap.
Hey, Will here with Blockspace Media. Did you know that we have individual feeds for all our shows? If you're watching the Mining Pod, Bitcoin Season 2, or the Court Show, be sure to check out the individual feeds You can find him on your podcast player of choice, whether that be Spotify, Apple, YouTube, etc. Just type in Block Space Media and you'll find all our shows pop up, or just type in the individual show name like The Mining Pod or Bitcoin Season 2. Be sure to hit that subscribe and give us a 5-star rating so we can continue to bring you the best content in Bitcoin.
What do you think about the international strategy with BTC Inc? You know, they have, I mean, David just said 15. I think he said 11 in jurisdictions outside of the US, the ones that I'm thinking of immediately. And BTC Inc is the parent company, for those who don't know, of Bitcoin Magazine and the Bitcoin Conference. They also have a fund side called UTXO Management. There's a liquid fund and a VC fund. And when we say BTC Inc, or when I say BTC Inc is seeding these things specifically, you know, team members at BTC Inc or UTXO Management typically are on the boards of these things. They're advisors, or if you like Dylan LeClaire is the head of Bitcoin strategy at Metaplanet. He's also a partner at UTXO Management. But right now they have Metaplanet. They've got Moon in Hong Kong. They're doing one in Thailand, I believe. I saw something, I think, a while this week or last week about Australia. So they're really spreading their tendrils out. And, you know, when I spoke to Tyler Evans at UTXO Management, he's also one of the co-founders of BTC Inc. last year, he said that they're always on the phone about these deals. And many more have come out after the Smarter Web IPO on the Aquis exchange in the UK. That's another one that they're involved in. So what do you think about the international strategy? Is that could that be considered an edge similar to what you were just saying about distribution and also how you're allocating the capital and where the funding is coming from?
Yeah, that's 100% it. So with crypto tokens, it's a global market. You can raise capital instantly across all countries in the world at the same time. When it comes to regulated securities trading on an exchange, there's a whole process to go through on how the business formation happens, and but in the end, it's going to be I think the distribution of BTC Inc. and Bitcoin Magazine that drives eyeballs to those names, and then you've got maybe there's a bit of a put option where if any number of them traded below their NAV for a long time, so the parent company could just take them out and use that as a way to acquire Bitcoin cheaply. I think that's the strategy that they're going for. I think it makes sense. Metaplanet is the prime example of the team there recognizing that there's a tax arbitrage, that regular Japanese investors pay, 40-50% taxes on Bitcoin, and maybe half of that on their securities positions. And if a name like Metaplanet can be put into the Japanese equivalent of a 401k, these NISA accounts, then it becomes highly tax advantageous for the end investor. And that explains why the Metaplanet MNAV is maybe the highest in the world among kind of those who are at scale, is because that arbitrage makes the most sense in Japan. I can't tell you like the intricacies of every single tax status in every single market, but that's something where I think BTC Inc. should be looking at in order to determine where to make their bigger bets. I also think it would be helpful for these companies to have like a living will, something where they put out how they think about an MNAV less than 1 and what levers they can pull in order to keep the valuation from going below 1x. It's kind of intuitive that you shouldn't raise equity if you're trading below 1x MNAV because it's dilutive to shareholders. But I think it's helpful to just repeat that point over and over and over again and kind of lay out like, okay, these are the 10 commandments of running a Bitcoin treasury company. And like, these are the things that we would do if valuation fell too far. That would certainly give me more comfort that the promoters here have the minority shareholders' interests at heart and are not just kind of mindlessly looking for bragging rights about how many Bitcoin do they own. It's not really about how many Bitcoin you own. It's about like how sustainable is your valuation above one.
And that keeping that MNAV above one, I suppose, is what you were getting at in your most recent research note for June. You and your colleagues wrote there, while we see some of these vehicles as interesting financial experiments to give holders option-like exposure to Bitcoin, we recognize the massive risk posed to investors in these companies. Because if you get below that MNAV, then you can kind of have, I want to call it a death spiral. People use that for everything, but you do kind of have this situation where the stock could quickly spiral out, right? Because it's not fulfilling the function that it's supposed to in the market. So one observation before I ask this next question, kind of related to that, Dylan LeClaire posted on the 29th of June that Metaplanet's MNAV is almost 100x their market cap, which to me just seems kind of crazy. Because to your point, it's tapping into, that's versus the initial market cap. Okay. Not current market cap.
Yeah, it's like 5x right now. It's like 5x right now.
Which is still, 5x is crazy. Even so, that's very, very, very large when you think about it. Going to two companies that have kind of underperformed in this regard, I think Gamestop is one. I don't know what their MNAV is currently, but they, announced a raise recently and they ended up plummeting. And you also mentioned Semler Scientific, kind of treading water around one. What do you think those stocks are getting wrong that these others are getting right? And maybe that's not even the right way to put it, but maybe it just goes back to what you were saying about your connections and the investor profile that you are looking for, right? Because a lot of the degen, roaring kitty neophytes who made maybe a bunch of money on GameStop, maybe didn't back during that run up in 2021, they actually don't like the Bitcoin strategy that much from what I've seen on Reddit. So why do you think these companies are not catching lightning in a bottle like some of the others?
In the case of GameStop, I think the market wants to see a clarity of thought, right? That's what Sigel does very well. Explain what he's trying to do, and then go and execute on it. And for MicroStrategy and the others, it's very clear. All they want to do is buy Bitcoin. There's no real other business to talk about. In the case of GameStop, the latest number I have is that their MNAV is still like 20x.
Is it?
Yeah, there's a whole other business there that, most people hate it, but like it or hate it, that other business has a substantial amount of value. And I think that GameStop might have hurt themselves by not communicating very clearly to the market about what exactly that they're trying to achieve. What's the ideal capital structure for this company? How much Bitcoin do they really want as a percentage of the business? If I recall, GameStop bought shares of Alibaba last year and did very well on it, and they put, I think, $1 billion into that, and great trade. Market probably won't pay a big multiple for those profits, because how sustainable are they that they're going to be able to pick stocks like this and position size correctly and hedge fund in a listed company, not much of a multiple to those types of names. So they're in this like halfway house. And I think we're seeing that among a number of the companies that have announced Bitcoin strategies, which are not pure plays. So Rumble is another one, right? Tether owns a big stake. They've started to buy Bitcoin. It's not really material as a percentage of their market cap. I look at some of these names because we own some of them in the on-chain economy ETF, and I had thought that putting X percent of your balance sheet into Bitcoin might be taken more positively by the market in terms of, people like diversification. There'd be a halo effect without the leverage, but it turns out that the market likes pure plays. And I think it goes back to my comment about communication. And if you're not filling the space, others are going to fill the space. So just keep repeating over and over again what your mission is. And if you can't do that, it's because you don't know what your mission is, GameStop. And so that's why, the market doesn't like it.
So speaking of picking out a mission and sticking to it, very strange news bit came out from Bit Digital recently that they were selling off all of their Bitcoin and divesting completely of their Bitcoin mining operations and going in on ETH as an ETH treasury and staking play, specifically for that line of the business, because at the same time, they're splitting out their HPC and AI business into a standalone called White Fiber that they are trying to IPO. They split it off some months ago, but the IPO news is new. They filed a non-disclosed prospectus, I believe, last week. What do you make of this? And then as a follow-up, is the ETH treasury play even viable? Do you think there's actually investor appetite for it?
Bit Digital has been involved in Ethereum for some time. I believe they were mining it back when it was proof of work. They've been active and holding ETH for a long time, and arguably, there's some synergies between kind of Ethereum and the AI business. At least there used to be, with the reliance on GPUs. So it's from that DNA, the Ethereum side of the business, that their AI and HPC aspirations were born. They've acquired a number of tier 3 data centers to serve that AI HPC market. They own some GPUs, and that business, the AI side, the HPC side, has been growing quite nicely. We think that business could earn $150 million a year run rate by the end of this year. And when you look at what the peers trade at, I mean, obviously CoreWeave would be a unique one, but even some of the smaller caps, trade at 10 times revenues for those cloud businesses. So even if you apply, a pretty big discount to the white fiber business, it could still be worth the entire market cap of the company, which is roughly $1 billion. So it makes sense to me to spin it out. I think it's a bit subscale for an IPO. I think they might be better served by finding like a late stage growth fund who would be willing to take an equity stake and fund some of the capex, because it's going to be very capital intensive to scale this business. But under the right market conditions, white fiber could be worth the entire market cap of the company. Their DNA, is in ETH. It's less crowded from a treasury perspective than the Bitcoin treasury companies. So I like it. If or you can flip the analysis. If Ethereum is if their Ethereum that they hold, they have like 250 million of Ethereum. If you value that at 2x MNAV, like most of the other Bitcoin companies are valued, then you end up getting white fiber at something like 3 times revenues, which again, very, very cheap. So I like the move. I think that the execution is still in doubt. I'm not sure if you can get an IPO out of something this small. Again, would prefer a growth partner. But I think it's good. And is there appetite for ETH treasury companies? Not among institutions. No, not yet. But maybe that's where the opportunity is.
So to wrap up, I want to use or reference a tweet that you shared on July 2nd. I thought this was really interesting. And the headline is Cantor leapfrogs Goldman Sachs, BTIG jumps Morgan Stanley in IPO league table thanks to crypto equity boom. So to close, I just want to present an open-ended question, perhaps. Is this the play going forward as Bitcoin and crypto becomes increasingly financialized and embedded into the TradFi financial landscape? Are tokens dead? Is this kind of like the investment thesis going forward, or is this cycle's play? Is this cycle's narrative, the crypto equities?
I think the treasury companies are this cycle's narrative. And so you kind of have to strike while the iron is hot and get your SPAC out there, get your shell company acquired, try to get out there, see if you can command any premium to NAV. And then if you can, then you've got some type of flywheel to get bigger. Not all of those of that jump in the league tables, though, is due to the treasury companies. There's also Circle that went public. Kraken is coming. There's going to be some other real companies that come public, and I think that that's more the story, right, for the next few years. Like that's where we're spending more of our time, is in trying to find compounders. I don't know that I would call the Bitcoin treasury companies compounders quite yet. MicroStrategy, yes. And the fact that BTIG and Cantor are doing more IPOs than Goldman and Morgan Stanley is, the early bird gets the worm. These guys were banking crypto, before the election, and the election really turbocharged their business. But SPACs tend to come and go, so I wouldn't bet. That's where a big percentage of this capital formation is coming from, is SPACs and reverse takeovers. Those windows tend to close pretty quickly, but there's always a market for a great late stage private company to come public.
Crypto equity boom is ongoing, and I do agree with you. It's going to be interesting to see over the coming years just how far this goes. Well, Matthew Sigel, thank you so much for joining us. Can you please let our listeners know where they can find you, find more of your research and some of your writing?
Yep. I'm on X, Matthew_Sigel, Sigel, or go to VanEck.com/node. That's our VanEck on-chain economy ETF actively managed fund, which I'm managing, which owns a lot of these miners, some of the treasury companies. It's a very diversified way to get exposure to the space in what we're hoping is a lower volatility approach. So have a look at the holdings there.
Thanks so much, Matthew. Have a good day, man.
Thanks, Colin.
Hey everyone, Charlie here. We're running a quick survey. We want to better understand who our listeners are. Do me a huge favor and fill out that survey. It takes under a minute, and the link is in the show description. This helps us make better content for you. Thanks a ton for listening. Link in the show notes.